Recession odds are skyrocketing for the US economy following Donald Trump imposing 25% tariffs on Canada and Mexico and another 10% on China. What's interesting about today is it seems like Wall Street is focusing more on the inflation impact that this could have to the US economy. But yet recession odds are skyrocketing. That's a very interesting dynamic. Now, yes, the S&P did bounce a lot from its lows of the day today. Do not be fooled. This is algorithmic in nature. This is not going to last, okay? Wall Street is going to sell this. We did not rally today on good news. We rallied on bad news. And Wall Street's going to keep taking advantage of this to unwind positions. This is a systematic unwind of long positions by hedge funds and institutions. Do not be fooled here. This is not the time to get super risky, to margin everything. No way. Now, here in this video, I will share with you all of your major news you need to know on markets and my opinions on what could be coming next for stocks. President Donald Trump announced last night and really yesterday that 25% tariffs on Canada and Mexico will begin today, and those did go into effect, adding another 10% as well on China. Now, in response to this, Canada's Prime Minister Justin Trudeau says Canada will be imposing 25% tariffs on US imports worth $30 billion with immediate effect. Going on to say that Canada will impose 25% tariffs on a further $125 billion of US imports in 21 days. And if US tariffs persist, Canada will also look at non-tariff measures, says Trudeau, does not give much details. Canada says US government has chosen to put American jobs at risk. And factually, I agree with that. I think that's part of it. Because why? Well, tariffs are paid by the company that's importing, okay? So Nike is now paying a higher tariff on all of their goods they import from China. One of the ways to offset that, if you're not able to pass all of that cost onto the consumer, which I don't think these companies will be able to, is to fire people. I think that by design is what the administration is trying to do to bring down 10-year Treasury yields. Once you reset 10-year Treasury yields, essentially kill inflation, then you can work to build the economy back up again. Trudeau, addressing Trump, says, quote, "This is a very dumb thing to do." Trudeau tells Canadians this is going to be tough. He also went on to say that Canadian companies have seen their order books dry up in recent days as really American companies try to rework supply chains back to the US. Basically, if you have call it aluminum, right, that you're buying from Canada, can an American company source that from the US instead? Maybe. That's where you could see Canadian order books, start to dry up, as Canada says. Canada's Prime Minister Trudeau says we will find new ways to cooperate with Mexico to deal with the tariffs. And he says we will take measures to prevent predatory behavior that threatens Canadian companies. Canada's Prime Minister Trudeau says, "I have tried to speak to President Trump in the past few days. I expect to talk soon." Canada's Prime Minister says US tariffs aren't about fentanyl, but that's the legal pretext. And he goes on to say that it's really about weakening the Canadian economy so the US can annex Canada, and it's not really about fentanyl. And here you can see Trudeau says Trump's goal appears to be to ruin the Canadian economy. Premier of Ontario, Canada's most populous province, says all US-based companies will be banned from taking part in government procurements. He says he is ripping up the contract with Elon Musk's Starlink. And Ontario to impose 25% tax on electricity exports to the US. The automaker group warns that Trump tariffs on Canada and Mexico will increase the price of some vehicle models by as much as 25%. And it seems like today, the emphasis by the markets is really on the inflation impact of this, or the potential inflation impact of this. You can see that Target today and Best Buy are the first retailers to warn US customers of tariff price hikes. Target chief executive Brian Cornell said its shoppers would likely see price hikes in its stores over the next couple of days, just hours after the tariffs went into effect. Cornell said the company has done a lot of scenario planning on goods like fruits and vegetables, a significant amount of which comes from Mexico during the winter, he said. We're going to try to make sure we can do everything we can to protect pricing, but if there's a 25% tariff, those prices will go up. Best Buy also echoed the price warnings on its own earnings call, telling investors that price increases are highly likely on the gadgets and appliances it sells due to tariffs. China and Mexico are the top two sources of products for the company, Best Buy CEO Corey Barry said on Tuesday. And that is why you could see today TLT is falling about 1.1%. People are really focusing on the inflationary impacts of what these tariffs could mean. And I think that's a flaw. I don't think we should be focusing on that. I think we should be focusing on the degradation of the economy that will come from this. Because the fact of the matter is, you're not going to be able to raise prices nearly enough to offset the impact of these tariffs. Consumers won't go for it. They will stop buying your product. And then factories slow down and boom, you have a recession that way. Or you have these companies that lay people off to make up the margin internally. That's also not great for the economy. So I actually think there's going to be very little inflation from these tariffs, but much more of a drag on economic activity. So I think Wall Street's getting this reading wrong today. British Columbia's Premier Abbey says the province is pulling liquor from red states off the shelves. BlackRock's Fink says investors should buy if there's a big dip, suggesting that maybe this is not the big dip that you should be buying. And he says that he sees a lot of volatility for markets over the next 6 months. And he says that 2025 will be a rocky year in markets, and that inflation will be elevated in the short term. Bank of America's Levine says we're watching unemployment levels. As we do get a jobs report coming out this Friday, I think the growth scare is not over with. But we will talk about that in just a moment. Trump wrote on Truth Social, he says, please explain to Governor Trudeau of Canada that when he puts on a retaliatory tariff on the US, our reciprocal tariff will immediately increase a like amount. So basically saying, yeah, you up the ante on the trade war, we will up the ante on the trade war. So yeah, I don't think this is over with either. Now, this was one of the headlines that did cause a positive reaction in the S&P today. Germany's SPD leader says $500 billion fund for infrastructure, $100 billion of it will go to the states. And I think this means the United States, but maybe German states. It was kind of a weird headline. Goldman Sachs looks like they are announcing some form of layoff. They say they will target vice presidents in next round of cuts. In Quebec, to add 25% penalty to U.S. bids on government contracts. And all eyes will be on the State of the Union address from Trump coming out later tonight. Canadian Association of Petroleum Producers says securing Ontario and Quebec's energy supply must be a national priority, suggesting that there's going to be a lot less exports of those products. And you could see here on the day today, the Dow is the biggest loser, down 0.75%, down about 325 points. S&P 500 is down around 0.5% at the time of recording this video. The Nasdaq is actually up 0.37%, Russell 2000 down 0.43%. The VIX was up a lot more today. It did come down to essentially break even as the markets have recovered a bit. Oil is down a little bit on the day today. 10-year Treasury yields are trading up almost 3 basis points to 4.20%, and gold is up 0.79%. So not nearly as much fear today as what we have seen in prior days. This morning, we did have the RCM TIPP Economic Optimism Index. The headline number came in at 49.8 versus the forecast of 53.1. So it came in sharply lower than expected. And it says here, this was the lowest reading in 5 months and missing market expectations of 53.1. The 6-month economic outlook, which which measures how consumers perceive the economy's prospects in the next 6 months, declined by 9.6% from 51.1 in February to 46.2% in March, breaking a 4-month streak above 50. The personal financial outlook, a measure of how Americans feel about their own finances in the next 6 months, dropped by 1.3% from the previous reading of 56.0 in February to 55.3 this month. Confidence in federal economic policies, a proprietary RCM-TIPP measure of views on the effectiveness of government economic policies, declined from 48.8 in February to 47.9 this month, reflecting a 1.8% loss. This component has been below 50 in the pessimistic territory for 43 consecutive months since September of 2021. So yeah, this really did not look great today. Now, tomorrow morning, we're going to have some very important catalysts. First and foremost, ISM services PMIs. It's pretty simple. If this is weak, that's good. Well, maybe. It depends how we're thinking about tariffs. If we're thinking about the inflationary impacts, bad data is going to be good news. If we're still concerned about a growth scare, then bad services data is going to be bad news and good data will be good news. And honestly, we've been concerned about the growth concerns, tariffs affecting growth. Now today we're concerned about inflation. So I honestly have no idea what's going to be good or bad when it comes to the services data tomorrow. But I do know it will be important because 70% of our economy is services. And that's really what we want to be watching. Potentially, it will be the subcomponents that are most important. Like if ISM services prices comes in low, that's going to be good. And maybe if the other data points come in low as well, that might be bad. We'll just have to see what that prices component of services and how that comes in. Now, new orders, employment, business activity, and of course, the headline number will be coming out. We will also get factory orders month over month. We're expecting positive 1.6%. So if we get some weak data there, that could bring about more of those growth concerns. We will also get the Fed Beige Book that comes out at 2 p.m. as well tomorrow. On Thursday, initial jobless claims, challenger job cuts. I believe the ADP employment change as well. No, the ADP employment change comes out tomorrow, expecting 140,000 job ads. If that comes in weak, that could be foreshadowing a weak non-farm payrolls report coming out Friday. Nonetheless, on Thursday, balance of trade for January, exports, imports, and initial jobless claims, as well as wholesale inventories, which will give us a new update to the Atlanta Fed GDP Now tracker. Fed Waller will speak on Thursday. Fed Bostic speaks on Thursday. And then obviously Friday's your big day with non-farm payrolls, expecting around 160,000. I think that number is far too high and probably vulnerable for a much lower reading there. Unemployment rate expected to hold steady at 4%. And then another big event will be the Fed speakers, Fed Bowman, Fed Williams, Fed Kugler, and a speech from Fed Jerome Powell around noon on Friday. Now, good news is markets are bouncing into the close, and it looks like you have a big reversal from the lows today. Almost looks like a hammer candlestick pattern where it literally looks like a hammer. This tends to be good in the short term, okay? And I think we could bounce from here, okay? If some of the fears start to die down, you could bounce from here. But I think the growth concerns will come back, and I'm not expecting a rally to new all-time highs anytime soon. I think we're going to be in a very choppy, volatile market that trends lower, okay, until the trade war backs off, until we get clarity on the economy. That is my expectation. So I don't think this is the time to go all in on margin again. I don't think this is the ultimate bottom for markets, but could it mean a short-term bounce? Probably. You're now down about 5% from all-time highs. At one point today, you were down almost 7% from all-time highs. That 7% level is where stocks normally like to bounce. You did not touch your 200-day moving average, which I think will ultimately happen. That is around 568. That could happen this week, potentially if the data comes in bad, showing a growth concern, and that's really what I would be on the lookout for as of now. Again, the Atlanta Fed GDP Now tracker is negative 2.8%. Now, this number will likely come up again, but as Wall Street is really expecting over 2% GDP for Q1, that estimate is far too high. And until we start to, really use the recession word more, I don't think the growth scare is over, because I do think, again, the data will continue to get worse from here. The CNN Fear and Greed Index today is at 21. Yesterday, it was at 24. So surprisingly, given the bounce that we've seen, we're still pretty fearful generally on markets. Market momentum is extreme fear, stock price strength, extreme fear, stock price breadth, extreme fear, put and call options, extreme fear, market volatility is neutral, safe haven demand, extreme fear, and junk bond demand in extreme greed, which is very strange. The percent of stocks trading above their 50-day moving average is also declining today, about 3.5%. So the market breadth out there is really not all that great. About 30% of stocks are trading above their 50-day moving average. And if we take a look at the RSP today, this is the equal weight S&P. Yeah, you've seen a big bounce from the bottom, but you're still down 0.5% today. Compare that to the SPY that wants to go positive here, only down about 0.2%. You are seeing an underperformance of the average stock out there on our markets. You do have more important earnings today and after hours, and really throughout this week. CrowdStrike reports today and after hours, and Ross tomorrow morning. Abercrombie and Fitch, Foot Locker, some other names, lesser known names. Wednesday and after hours, Marvell, Rigetti, Zscaler, MongoDB, Viva, Victoria's Secret. Thursday, JD.com, Cracker Barrel, Kroger's. Thursday and after hours, Broadcom, Big Bear AI, Costco, Gap, and Hewlett Packard Enterprise. It does look like recession odds have climbed to 39% in 2025, according to these polls, if you will, on Kalshi, which is up from 13% just a couple of weeks ago. Now, Tesla is obviously bouncing a lot, even in the time of recording this video. The stock is now only down 1.75%. It looks like you're finding a little bit of resistance around that 200-day moving average at about $279.84. You're barely above that right now at about $280 per share. So we want to see if we can close above the 200-day moving average. That's obviously going to be good if that happens. Not as good if it doesn't happen, but it looks like this trend line here that I have drawn on the chart for, months now, ever since really the lows at $138, is serving as support today. So watch that downside, see if you can stay above 270. And some comments from Fed Williams is coming out right now. He says details of tariffs are key to understand. He says there's a lot of uncertainty on how tariffs will play out, but he says he expects to see some impact on inflation from tariffs. Now, Trump also told advisors he wants to announce a Ukraine minerals deal during Tuesday's speech to Congress. So that is something that we could get later tonight. Overall, right now, again, in markets, I do think we will continue to trend lower. I think the markets are underestimating the risk to growth when it comes down to tariffs. You have two choices as a company: raise prices or fire people if you cannot raise prices. That's not a good dynamic. At the same time, you have Doge cutting back the spigot of stimulus and overspending in the economy. Doge is laying people off. That creates uncertainty and drives less consumer spending. So it really does feel like, to me, again, following the last 2 years of big gains, markets right now are underestimating the risk to growth. And, we always talk about here on this channel and acknowledge the fact that recessions really don't happen for no reason these days, okay? There's the great financial crisis, the housing bubble, if you will. There's the stock bubble in 2000s, the tech bubble. You have COVID, right? These are all shock events that cause recessions. And the more we analyze this situation and how markets are evolving, tariffs could be a shock enough to push us into a recession. Even if we don't go into recession, I think there's enough there for markets to build that fear. And that fear of a recession is what is going to push stocks down long before you are ever actually in a recession. So I think the risk is to the downside, not the upside. And if you're looking on this or looking at this from a risk reward standpoint, I mean, what is your upside risk at this point? What is the chance that you miss the upside? And I don't think there's much of that. I mean, to get back to new all-time highs, you're going to be looking at about a 5% move higher. Great. But what's the downside if we did go into a recession? I mean, you're looking at 10, 20% plus downside from here. I don't like the risk reward setup here, but I do think you want to be selective in buying quality companies that are beaten down, like Tesla, for an example. It's down 40+% from all-time highs. You've priced in a lot of that risk. I think you've actually priced in some recession risk as well to Tesla. Now, Apple at all-time highs or close to all-time highs, I don't think is priced in that recession risk. The SPY definitely hasn't priced in that recession risk. Small caps have priced in a little bit more of that recession risk, down, I believe, 15% or so from all-time highs. Let's take a look at that real quick. I mean, the Russell has gotten absolutely clobbered recently, especially from those all-time highs. You're still down about 15% at the low of the day. Today, you were down about 17%. Priced in a little bit more of that recession risk in that area. So I really think you want to be selective here. And again, prepare to see more volatility. And I do think more ultimate downside in the weeks ahead. So let me know what you think about this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one. So let me know what you guys think about this information down below in the comment section. Again, pay down margin, raise as much cash as possible. Stocks that you do not want to own during a recession, potentially trimming some of those positions, right-sizing some of those positions could be the good move here before the growth scare is really even more challenged, and that could be just later in this week, again, with the economic data that we have. I am not a financial advisor. I'm not a financial planner. Do whatever you want to do, but that's what I'm doing. I'm getting cash ready. I'm staying patient here. I'm trying to analyze every day as an independent day. Why are we going higher? Was it good news? Was it bad news driving that? How is the economy evolving, right? These are questions that we really need to ask ourselves. And when stocks rally from the lows as much as they did today on bad news, yeah, that's not sustainable, okay? And unless we start to get good news, it won't be sustainable, and we will continue to fall lower. Just my thoughts. Again, let me know what you guys think down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.